right, guys, welcome back. It is the game plan time. Hope everything's doing everyone is doing wonderfully well. Time to get back into the markets. Monday was a holiday for the stock market. Crypto was still open, and there were still things going on. So without further delay, let's get right into the action. I'm going to do a quick rundown here of the key news of the day. All right, so this was posted on Verified Investing on Twitter or X. And again, make sure you guys go follow them. The amount of information here that is incredible, right? The key things for the day. So number one, Morgan Stanley and Goldman Sachs reported earnings this morning. Both companies did better than expectations. I was just looking at their charts. We'll look at them in just 1 second. The stocks initially were up. They've started to turn back and rally or sell off to the downside. Next, Trump. We heard about Trump yesterday in the caucuses in Iowa. He ended up blowing out his opponents. Again, that is a key thing for his nomination going forward. Next, UBS raised its target price for the S&P 500 to 51.50 from 48.50. Futures are trading lower on the back of yields and the U.S. dollar moving up. Again, this is a combination of the fact that we basically have instability continuing to grow in the Middle East, and there were some hawkish comments from Europe on Monday when the U.S. stock market was closed. Microsoft, AMD, and NVIDIA are all rising pre-market. AI continues to be the word out there. My guess is, and this is jumping down here to Tesla, this is probably having something to do with Tesla and Elon Musk saying that he will not be pursuing more AI stuff until he gains a bigger controlling stake in Tesla. And again, that would be a benefit to NVIDIA, Microsoft, AMD, all of these AI plays. All right, Apple is falling sharply again today. They cut their prices on the iPhone in China. We heard just a week ago, basically, that iPhone sales, or I should say chip sales for phones, were very, very weak, and Apple again is down. There's going to be some good trade levels right there, and natural gas is falling sharply today on the back, actually 10% just in the last couple days, so nice little move there. All right, Bitcoin holding key technical support. We're going to look at Bitcoin really quickly here in just a few minutes, between 42 and 43,000 on the back of last week's ETF approval. And lastly, and this one's important down here, I hope you guys can see it, the New York Empire State Manufacturing Index came out at minus 43.5. 43.5 minus. Expectations were for minus 5. So minus 5 minus 43.5 is what the number came out. Last month came in at minus 14.5. So again, certain economic data here is really starting to accelerate to the downside, and we'll have to keep an eye and see where things go. All right. Without further delay, I want to get right into the charts here. Basically, what we're looking at here is the S&P 500, or the spiders. You can see pre-market. This is pre-market. This was Friday after the close, right? Friday after the close. Today's Tuesday. Markets are open. We had the futures opening sharply lower, kind of grinding lower, and then rallying almost back to just slightly negative. Then we are seeing a little bit of weakness come in here. All right, so again, we are looking at a lower open on Wall Street. Now, if we look at the charts on the daily chart, what we do know is that we continue to be up against resistance, right? So again, very clear. I've talked about these levels here, this level here, and then this is your all-time high double top right up here. So we know that the S&P is into resistance. It's running out of steam. It needs to consolidate if it's going to break through. I do think there's always a chance it could break through, but we have to watch this level. We get above 480 on the spiders, I think you're heading to 500 on the SPY, right? And that would equate to about 5,000 on the S&P 500. All right, going over to the US dollar. This is a great one, guys. So remember last week, I was talking about the bull flag of consolidation. Knowing your flag patterns is so important. Remember, crash course in bull flags and bear flags. A bull flag is an up move with a sideways move like that, 90-degree angle. If you have a slight angle to it, like let's say it's like this or like this, that would be called an in spirit of bull flag, all right? It's still bullish. It's just, it's varying degrees of bullishness, right? So the perfect right angle, this is your highest percentage bull flag. As the decline kind of ensues here and you go down, the probabilities of it playing out increase. All right, bear flag, same thing, just in reverse. very clear right there. There's your bear flag. Generally, that would play out to the downside. But ultimately, again, same thing. If you have a little bit of an incline, that's okay. But the probabilities start to slowly drop as you go up and up and up, to the point where, by the way, when you have something like this, I don't really look at that as an in spirit of bear flag anymore, because what ends up happening on this is oftentimes you'll go like this. And then what type of pattern is that? It's actually a bullish pattern. So the bear flag can actually morph into a bullish pattern or bull flag if the angle is too steep. Monitor those angles, guys. It's very, very helpful in terms of probabilities and understanding the chance of making that trade work. Now, what did we have right here? Well, we had this beautiful up move right here, right? So again, a nice little up move on the charts. And we saw the flag pattern ensuing. What type of flag pattern is that? Was that almost a perfect right angle? I would say heck yeah. What do you think the probabilities were of an up move? Very high. I've been talking about that since last week. The dollar obviously breaking to the upside. Now, where's the dollar going to go? What's the most likely scenario for the US dollar? And this little high right here, right? I mean, that's really where your first stopping point is going to be. And just looking at that, that would equate to about 104.15 to 104.20. So again, we're looking at a level kind of right in this vicinity, right in this area right up there. So there's a little bit more upside potentially on the US dollar over the course of this week. Going to the 10-year yield. 10-year yields are also pushing up. And like we saw on that news brief from Verified Investing, it's likely that you have the instability in the Middle East continuing to kind of get worse and worse there. Then you throw it back to potentially election. People are starting to see these caucus numbers come out, these poll numbers come out, and the chance of kind of some turmoil with the elections is increasing. And really what we're seeing is a VIX, and I haven't really talked about the VIX today, but the VIX is at levels that it hasn't seen in a long time, very low fear. So to see fear uptick makes sense when, again, you start to see kind of, you know, you look at the dollar moving up, that's a fear trade. You look at gold potentially moving up, fear trade. Bitcoin, again, is still a risk asset. And here we see, again, yields are still stuck on the 10-year between this level. Remember, we got CPI and PPI data last week, and yields, again, kind of came down towards the end of last week, now pushing back up. But this is still kind of like a jaw where you want to see, does it break above here or does it break below here? And right now we're stuck in a range on the 10-year. All right, I still think, by the way, and I said this before, I still think we're heading back up on yields first before we roll back over. I'm looking again at kind of a retrace to a scene of the crime right here. This was a classic move up, down to support, up, down to support, chop, chop, chop. Notice the pattern. What type of pattern was right here? Bear flag, right? There's your down move, sideways consolidation. What did it tell us? Likely scenario down, and there it goes. My guess, again, is eventually we're heading back up into this range right here. And again, I apologize for my drawing skills, but you guys get that. Generally 4.5%. It would not shock me to see a move back there. Okay. So again, we've looked at the dollar, we've looked at the S&P, we've looked at the 10-year yield. I do want to get into some charts that are making moves today, so let's take a look here at Apple. All right, so Apple last week had a little bit of a bounce after some really nutty bad trading action the previous week, the first week of the year. But we are seeing, look at this drop on Apple today. This is a big drop. And I've gone on record, guys. I've said to you guys that it makes no sense to see Apple trading at a valuation where it's been trading. They have lower revenues year over year. All right, the only reason their profit is going up is they're artificially basically buying their own shares back. When a company buys their shares back, they basically make them vanish. So there's less shares, which means even if you're making the same amount of money and you have less shares, your PE ratio actually comes down. Your profit per share goes up, right? Because there are less shares outstanding. And that's what Apple's been doing for years. They've had so much cash, they just keep on buying back their shares, which then makes it look like the company's doing well, but it actually isn't doing that well. And listen, they have a cult following, but again, it's one of the most highly, if not the most highly invested stock out there, which means there's a lot of sellers that could come out. And look at this drop today. All right, so on Friday, we closed at like 185 and change, 185.50. We're down to 181.90. That's a big drop on Apple, all right, for a almost $3 trillion company. Now, again, look at the pattern, right? So here we have a pattern. We have a down move, and then you have this pattern, right? So this wouldn't be considered a classic in like bear flag, but would this be considered an in spirit of bear flag? And the answer is yes, it would, which tells us probability-wise, eventually there's at least a slightly better chance that it would be going down. What's it doing today? It's trading all the way down right in this range right down there. All right, now, in terms of support today, what are we looking for in terms of support? Number one, this low pivot right here, which if I look at my chart is at 180. So 180, there might be a day trade there. I'll tell you guys this, is that being in my live trading room and leading our traders, I will likely, potentially, I should say, be buying Apple for a day trade there, not as a swing trade. It's not nearly at a level that I like it as a swing trade yet. Where would I like it as a swing trade? Let's zoom out and go to a bigger time frame. Let's flip over to our weekly chart and see what we have on our weekly chart. And I would say if you really flush down, right? So, so there's a couple things to do. If you wanted to do a real, so let's stop here. Swing trading means you're holding it for more than a day. Day trades are intraday. If you're holding it more than 24 hours, it's a swing trade. Now, some swing trades can be 3 days, 2 days, 4 days, a week. You have other swing trades that could be months. It's really up to you how long you're looking for that. All right, the higher risk level, I would just say right here, if we look at this real quick, on Apple's weekly, we take this low pivot from January of last year. This would be your higher risk, quicker trade. It's at around 177, right? Right there, when you hit that level from this pivot low right here, right to here, then that should be a quick bounce. I ultimately think you'll get a bounce there, but then it's probably going to break through. The next key level for me is likely going to be in this range right here. This would be where I think it becomes very attractive again as a multi-month maybe swing trade off of around 155. All right, let's keep going, guys. We got lots to cover today, lots of chart action to go over. Tesla. So again, I mentioned earlier when we started this broadcast, the game plan here, that Elon Musk basically said, hey guys, I'm not going to pursue a lot of AI with Tesla unless I have a bigger controlling stake in the company. The stock obviously is under pressure this morning. Not a huge drop, but we are seeing it coming down just a little bit. If I throw up my pre-market data, you can see it's down just a little bit here, right? So closed basically over here, it's trading down on the day off of its lows. Now, as a trade, this is starting to look interesting. I'm going to say that. So the RSI is now into the oversold, or as of today, it should be hitting the oversold level. And we have a couple levels. So if I zoom out on this chart, right, and we go all the way back here, there's a longer term trend line from this pivot low to this pivot low that's coming into works right here. Now, the level on this is approximately 211 and change, so maybe 211.50, somewhere in that vicinity. So that would be a potential first level to watch on Tesla for maybe a bounce. If it continues through, okay, so let's talk about that. If it continues through that level, where is your next level to watch? And it looks like today, 205.25. There's a little bit of a pivot going back here to here, cuts through almost to right there, but right through, there's a little gap fill right there, former level right there at around 205. And then obviously your low pivot right here, which is going to be in the 195 range there. So it is, listen, it comes down to Tesla has a wedge pattern. So at some point it's going to, in my opinion, I think it's going to break down lower. I've talked about this before. I do think that the competition, the macro scenario, I think that New York Manufacturing Index today was atrocious, guys. I mean, that was atrocious as a number. Like that number's like depression type number. That is a really bad number. Now, granted, the labor market is still strong. We've seen that. Although, again, I think it's fair to say that there's been a lot of revisions to past numbers. So they come out with a great number, and then the next month they revise it down 20, 30%. But still, the labor, jobless claims have been strong. Again, the question I would say is, how many people are taking 2 part-time, 3 part-time jobs that's keeping the labor market looking strong? I actually do think there's some major issues under the belly of this labor market. Don't forget, of last week, we saw Citigroup announce 20,000 layoffs over the next 2 years. BlackRock announced layoffs. And as we get into earnings season, I have a feeling we're going to hear a lot more layoffs. Partially, the economy is slowing. And you know what, guys? AI is here. And AI is going to take a lot of jobs. It's going to create some jobs, probably higher paying jobs. But to me, AI, just like the internet, it essentially creates a disparity. We've seen the difference between the middle income earners, they've started to disappear, and you have this wide disparity. Over the weekend, I was reading that information about how the richest 10 people doubled their wealth since COVID, while everyone else essentially got poorer. So again, the disparity is there because technology it basically creates higher paying jobs to run that technology, but the technology supplants the lower paying jobs. They get done by AI, they get done by robotics, they get done by all of these other things, or they get shipped out of the country. But in any case, I digress. Don't want to get too far off topic from the charts. Okay. So Tesla, again, we'll see again if that's an opportunity today. Here's your chart of Morgan Stanley. Look, early in the day, it was popping. Look at the drop on Morgan Stanley. I do want to just point out that this is a great example of a chart that was generally overbought. Right? And again, same kind of thing went with JP Morgan. Take a look at JP Morgan. So last Friday, JP Morgan reported earnings. The stock, it was a great earnings report. The stock was up substantially early in the day. Look at where it closed. Lows of the day. But if you look at this chart, I mean, how many times in history, and I'm a tech guy, right? I'm a numbers guy, a data guy. How many times in history has JP Morgan in a straight line with no major pullbacks gone up 25%? This is like a massive company. 25% move up, and then they report earnings, and do we expect it to go up like another 25% straight line? No. It's going to be profit-taking. Same reason why Bitcoin was a sell the news event, as I predicted. In fact, we'll get to that chart in just a minute, but I basically told you guys, I said it's going to go between 48 to 50,000, and then I said it's a sell the news event. That's what happened. Now, the question is, how low does it go? Has it already reached its bottom? We'll cover that in just a minute. But again, same thing with Morgan Stanley. If we flip over to Goldman Sachs, these banks have had monstrous runs. And again, big moves to the upside. This one at least had consolidation, so you could make a case, is that a bull flag? Maybe it is like this and eventually goes up. But still, big runs in the banks. They need to take a pause. All right. On that note, I have one more chart to go over real quick. It's Boeing, guys. Boeing is selling off again. I heard that China's delaying one of their big orders. There's still questions about safety and all these other things. And so, again, Boeing continues to go down. For me, I say, wow, this could create an opportunity, right? This is the greatest thing to understand, is that when you see selling in stocks, it doesn't mean, oh, my goodness, this is horrible. It means, wait a minute. This might give me great opportunities to make a lot of money by picking things up that are good quality names at key levels. So first off, same thing. Look at the rise on this stock. So this went from $175 to $265 in a straight line. Insane. Again, that does not normally happen. So the idea that it was ready for a pullback was pretty obvious. However, this is a big pullback. First thing I want to do, let's flip over to our fibs. Let's do a Fibonacci retrace. What does this tell us? Okay. So if we go from peak or low to high, it looks like we have our Fibonacci retrace of 618 at around 211. So 211 is your first level to watch here. Now the key is, and what I do is, I don't just trust one thing. Like as an investor or a trader, if you trust one factor, you're honestly going to probably be right 6 out of 10 times. Now you might say, okay, that's great. But if you're anything like me, my losers tend to be a little bit bigger than my winners. So 6 out of 10 doesn't float the boat. Like that's basically break even. What I need to be is I need to be 7 or 8 out of 10. So I need to find multiple factors. And so what you do then is you start saying, okay, well, what in this range also gives me an approximate level of 211 to 210? And the first thing I'm seeing here, by the way, is look at all this sideways chop over here, right in that same range. That's awesome support. That's, again, broke out above it here, and now it's retracing into that same sort of area. So now I'm starting to think, okay, maybe this is intriguing to me. Lastly, again, what we can do here is we can look at trend lines and just see if there's anything impressive in this range. And again, let me erase this so we can do it. I don't think I see anything at this point that would get me my attention as a third factor. And by the way, it doesn't mean there isn't a third factor. It's just I don't have time to look through everything. But I will say this, is that this would be your secondary support here. So if this continues down here from this low to this low, so we have our level at 210 right here. We'll call it 210-ish. If it gets down to 190, that would be an additional add level. Because again, trust me when I tell you guys, I've picked up plays that have multiple factors. It's a probability game, so you're still going to be wrong a bunch of times. It's just you want to minimize those, and you need to know where it could go. And if 210 doesn't hold, you might have a little support at 200, but then 190 would be a big level there on the charts. All right, guys, stepping back to the center screen, I got to thank iTrust, who just rocks my world with what they can do for us in terms of their retirement. We're going to take a quick 30-second break, and I'll be right back.
Do you have an existing IRA or retirement account? iTrust allows you to buy and sell crypto, gold, and silver all right within your IRA. And the best part is they make it simple. All you have to do is transfer your preferable amount of USD through iTrust and then invest that into crypto or precious metals on the platform. To get access, use the link below to find out more about investing through iTrust Capital.
All right, guys, we are back here. Let's rock and roll. We've got Bitcoin here. So again, Bitcoin surging last week, up initially on the back of that spot ETF approval and then dumping out. Look at where we went to here. Classic little level, a retrace to support. So there's a lot of support here, and here we are. We find ourselves hanging on to support. The first thing that catches my eye, number one, okay, now listen, there's bull and bear cases here. My job is to look at all sides of it. And this is the big difference between a lot of the kind of the uber bulls, right? They only want to hear the positives. They only want to hear the positives. It's why a lot of them were buying at 65,000 or 69,000 and then got wrecked down to 20 when I called that move. Ultimately, what you have to recognize is that you have to look at both sides and then you look at probabilities. Like I said, everything's probabilities. Okay, so what we have here, there's some positives and negatives. Number one, a positive is we're only back to levels that we basically saw about 10 to 15 trading days ago. So as of now, this is just a run-of-your-mill retrace, and it's holding this support line. That's important. As long as it holds that support line, okay, it's fine. Then the negative, though, is, number one, this was a topping tail. All right, number two, you have to start watching as a technician what type of pattern could this be, right? Could this be a bearish pattern? Now, it's still an immature bearish pattern, all right? And there's a difference. So when you have a drop and you have one candle sideways, immature, 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 slightly more mature, very mature, very mature, okay? The idea is the more days that go and continue to create that pattern, the more mature the pattern gets. Just like a human being, the more mature, the more it has power to it. And the idea is that probabilities are very low in the early stages of it playing out, but as it matures, the probabilities increase. So right now, this is still an immature bear flag, but if we get a couple more sideways days here, it becomes more of a mature pattern and probabilities begin to shift towards the downside, okay? So those are just, that's something that we have to watch. The only other thing that I would just point out that has me concerned that we could have not just a multi-week top here, but a multi-month top is that if you go to your daily chart, and your weekly chart, and I flip this up here. So this is your weekly chart on Bitcoin, right? So if we look at this, what type of candle is this? So we know we had a topping tail on the daily chart, which is bearish, but again, daily chart tells you what's going to likely happen over the next 10, 15 days. A weekly chart topping tail, though, that's telling you now over the next, let's say, 10 to 12 weeks, maybe, what could be ensuing, and that's a bearish indicator, right, when you get that reversal. Lastly, okay, if we go to the monthly chart, now the month's not over, so this is the key, and this is going to be the big one. But as of now, this is a topping tail on the monthly as well. Now, if the monthly puts in a topping tail, you could literally be looking at a many-month high on Bitcoin. And again, we know that going into the halving, sometimes we see a dump, but that's not that far away now. But it does kind of speak to whether or not we see a risk-off movement here. And a lot of people won't want to hear that. I'm just telling you, the candles are the candles. You go in textbooks on technical analysis, or as some people like to call it, astrology for men. You basically have this candle formation, this candle of a topping tail is in there for decades, if not 50 years, as a signal because it's been back tested for that long. Now, it doesn't mean it's not failable, right? It can still fail, but again, you just have to be aware of what it tells you. Okay, oil, guys, just quickly jumping over to oil here. Just looking at this, we're still stuck in this kind of little mini wedge pattern. I still think there's a potential for an inverse head and shoulders here, but it has not triggered. An inverse head and shoulders means literally nothing unless the neckline breaks. What's the neckline? Basically, here's your head and shoulders right here. This is your neckline. So as long as you don't get a daily close above this, it means nothing. If you have a daily close above this, then you start doing your measured moves, and you do that measured move, and I think, again, it prices out to about $82 per barrel. Okay, Couple more things, guys, before I have to get going. And again, I had a lot more I wanted to talk about, but I don't have a lot of time. Gold is pulling back a little bit today, flipping to silver. We're consolidating below the line. Gold looks a lot stronger than silver, guys, in this scenario. So right now, the chart on silver is actually very bearish versus gold is still okay, still very close to its all-time highs. Nat gas, guys, again, look at this drop on Nat gas. I want to show you one thing before I go. All right, before I go, I just want to show you this. It's pretty darn cool. Taking your highest point on Nat gas over the basically in 2023 to your lowest. Do you guys remember what your retrace was? It was a perfect 618 retrace before the high and the pullback. And look at that pullback. That's a huge pullback from 315 all the way back to 264. By the way, I'm a buyer at 250 to 255 right down here. But 618 retrace. Watch that. Now, let's flip over to Bitcoin again one last time. And if we go to the all-time, let me go back to the daily chart here. If we go to that all-time high on Bitcoin and we do a retrace from the all-time high of 69 down to the lows of this cycle, where did Bitcoin top out? Exactly at the 618 right there. That's cool, guys. So again, my point is that that's actually my favorite retrace. So there's lots of Fibonacci numbers. There's the 0.5, there's the 382. The 382 is not bad too, but it's more of a shorter term move. But let's bring it back to center screen. But really, again, the 618 is my favorite. When I see a 618 retrace, obviously you need multiple factors. You just can't go off the retrace, the Fibonacci, but that one's a pretty darn cool one. All right, markets open in a couple minutes. I got to get going, guys. Thank you as always for tuning in. You guys are rock stars. Thank you again, guys, and I'll talk to you tomorrow. Take care.